Over time, the ups and downs of the markets can change the makeup of your investment plan, leaving you with more risk than you'd like or less growth potential than you need. To address this, you need to develop and execute a strategy for rebalancing your portfolio. Rebalancing is a process by which you periodically reset your portfolio back to a predetermined mix of stocks, bonds, cash, and other investments. There are different ways to rebalance your portfolio. Whichever method you choose, it is important to stick to it and avoid reviewing and rebalancing your portfolio too frequently. Unless there is a significant up or down swing in the market or a dramatic change in your personal circumstances, such as an unexpected early retirement, once a year is usually fine. With periodic rebalancing, simply mark a recurring date in your calendar on which you will analyze your holdings and adjust your asset allocation if necessary. Tolerance band rebalancing is done when your asset allocation changes by a specific percentage. For instance, you may set your initial asset allocation at 60% stock and 40% bond with a 10% band. Anytime the asset allocation gets to 70% stock or above and 30% bond or less, you reallocate back to the 60-40 target allocation. With this strategy, you might reallocate multiple times in one year and none in other years. Note that with each strategy, you are trimming positions whose asset allocation percentages has risen and buying position whose asset allocation has dipped. Hopefully this will lead you to tend to sell high and buy low, improving your long-term risk-adjusted returns. A third strategy I like to employ might be called tactical rebalancing. With tactical rebalancing, I set up the investments to distribute their interest, dividend, and capital gain payments to cash, rather than reinvest them back into the same stock or mutual fund. After the cash balance grows, I contact the client to discuss where to deploy the cash in light of their current holdings, our market outlook, and their particular circumstances. It might be a good time to add to their equity positions, or perhaps it's more appropriate to invest it someplace safer like a short-term bond fund. In other cases, the client might have an immediate need for the cash and I can distribute it directly to them. I like this approach for two reasons. One, we can customize portfolio management to each client and their circumstances, and two, it keeps us in regular contact with the client, so if there is a material change in their situation, it tends to come up in conversation. Whichever rebalancing method you choose, regular rebalancing helps you focus on the big picture and keeps your goals and risk tolerance at the forefront of your investment strategy. If it has been a while since you reviewed your asset allocation and rebalanced your portfolio, or you're not even sure if your current mix of investments is still right for you, give Deb and I a call at 518-477-5468 or 1-800-630-9313, or visit our website at www.centersquareasset.com, and we'd be happy to schedule a review.